Okay, good afternoon, ladies and gentlemen. Thank you very much for the opportunity to speak in front of you today. What I would like to do is firstly introduce you a little bit to Scope, the Scope Group, and to explain what the Scope Group can do in order to achieve the objective also of this conference here, to attract foreign capital to Iran. So we got a couple of things that we believe are useful for you as organizations here in Iran, and I would like to just quickly walk you through that. A bit of my background: I've been in the ratings business for almost 20 years now. I've been a banker before. So with a deep knowledge of what the role of ratings is in capital markets and how ratings can actually help overcome also situations in emerging markets, because once I was responsible for the emerging markets practice of Standard & Poor's as well. So I have some sort of experience. I've seen situations like this before. So let me quickly introduce you to Scope before we talk about the types of services and the assistance that we can provide. Scope at a glance. Well, Scope is the biggest European rating agency. And as you know, in the ratings universe, we're talking about a global oligopoly of Standard & Poor's, Moody's, and Fitch. And to date, there's been no real alternative to them anywhere in the world. However, with the effect of the financial crisis, there was a lot of demand in Europe from issuers and investors alike to provide the markets with an alternative to the three US-based rating agencies. So going back to 2012, 2013, we have decided to create this European alternative to Standard & Poor's, Moody's, and Fitch. And I will tell you in a second what success we already have had and the support we've received from issuers and investors. Now, we're a full-service, internationally operating rating agency. Full service means that we do all kinds of ratings that normally are being provided by our American competitors. We do corporate ratings, we do bank ratings, we do project finance, we do structured finance, we do sovereign ratings and sub-sovereigns. The only thing we don't do is insurance companies. Other than that, our portfolio of services is very much the same of that of Standard & Poor's, Moody's, or Fitch. And we are internationally operating throughout Europe. And on this little map, you can see where we already have offices in place, and we have business in all our business lines across all of Europe already. Our head office is in Berlin. Now, it's not Berlin because Berlin is the most famous financial capital of Europe, but it's happened so that the company has been founded in Berlin. However, our largest office by now is already Frankfurt. I think that makes more sense to everyone. But we also have a large office in London and in the other European centers, and we just recently opened an office in Oslo to serve the Nordic market as well. To date, we have over 180 employees, and I'm very happy to say that we have 30 different nationalities in our organization already. We have a strong network of shareholders, and our shareholders are predominantly private shareholders. One that you may or may not know is Mr. Stefan Quandt, the majority owner of BMW. But we also have a strong base amongst European insurance companies. And that is important not just for us to receive the funding from those European insurance companies, but it may also be important for you, because if an insurance company invests in a rating agency, I think it's quite normal or logic that they will also accept our research and our analysis and our ratings when doing their own investments. So in that sense, having the insurance industry backing us as a rating agency is also to your benefit as our potential clients. And in this stage, it comes in handy that we don't rate insurance companies, because if they were invested in us, we couldn't rate them, obviously, because that would be a conflict of interest. Now, the main point as to where or the value added that we bring to the market is that we have what we call differentiating analytics. And I'll talk about that on one of the next slides in a little bit, but it wouldn't make any sense for a European challenger to the large established American rating agencies if we just did the same. If we applied the same methodology, if we applied the same way of interacting with our clients, you might as well go to the original and you wouldn't need to come to Scope, provided that the original were to offer a service here in Iran. But for Europeans, obviously, that would be possible. So we have different analytics. We are Europeans. We're used to very different cultures in Europe. We're very much used not just to different languages, different cultures, but also to different ways of doing things. And that is one of the big differences we have to our American colleagues at S&P, Moody's, and Fitch, because we incorporate the respect for those differences also in our methodology. And this typical one-size-fits-all approach, coming from our cultural background, wouldn't serve the markets properly. Now, that is, in a nutshell, Scope at a glance. But why are we interested in Iran? What makes me stand here? Now, we've been looking at the Iranian market for almost a year now. We've had many discussions, we've had many presentations, and we've come to the conclusion that Iran is a very interesting market, not just because it has so much catch-up to do, but also because there's so much potential and such a great need for international financing that a rating agency is very well positioned to also offer services here in Iran. Rating agencies create the bridge between issuers, those who need the money on one side, and investors, those who can provide the money. But normally, the investors don't know much about the issuers. And there's one common language globally that makes these two connect, and that's ratings. Because a rating agency provides an independent view, an independent opinion on future credit risk, on the future ability of the borrower to pay interest in principal in time and on full. And that independent opinion is important in international capital markets to create the trust and the belief of investors that they have invested in the right asset. Now, in addition to that, we are seeing growing interest from our European corporate clients in more research on Iranian counterparts. Now, there's a lot of European international corporations who would like to invest in Iran, whether it's project finance, whether it's partnerships, or whether it's just simple export. Now, also these companies need a view on credit risk, on the quality of their partners. So we are in active discussions with European large corporations on providing them with our view on the creditworthiness of their potential Iranian counterparts. Now, last but not least, we're here to provide an unbiased European perspective on credit risk, and thereby try and bring those two sides, investors and issuers, together. And that is pretty much what a rating is all about. A rating is about creating transparency and trust so that investors have the transparency, speak the common language, and ultimately trust in you as issuers when it comes to capital transactions. So transparency and comparability on company financials. Here we go back to the story of IFRS, but we don't necessarily have to have IFRS. We need to understand your accounts. And then we can try and translate our understanding of your accounts to the investors globally. But clearly, having a common accounting standard like IFRS would also make our work a lot easier. But it goes beyond just financials. It's also about financial policy. That's how you will run your company going forward. And ratings is a very much forward-looking exercise. So we need to understand your financial policies. We also need to understand what we call your business risk profile. And your business risk profile is very simplified. your position within your industry, how do you stand vis-à-vis your competition, how easy is it to defend your market position, how easy is it for you to grow within your market. But then obviously we also have to understand the industry risk of the industry you're operating in. Is it a very volatile industry? Volatile industries in Europe are, for example, car manufacturing. Or is it a very stable industry? And the example could be the food production companies or food production industry. So all we do is we take all these aspects into account and provide the markets with a future view or with a view on the future creditworthiness of the people that work with us, of the issuers. By doing all that, we help market participants to create trust. To create trust, not just in the financials and the future ability to pay, but also in the governance structures, the corporate structures, the continuity of what you have started, and whether there is a chance to perform in the same way or maybe even better in the future, and to your willingness and ability to disclose. Because without disclosure, there will be no trust. And without trust, there will be no financing. Let's be absolutely clear about that. So we aim our research, we target our research at the people that would matter to you, whether that's project partners, whether that's suppliers, whether that's banks, or whether that's international investors, or maybe even your customers outside of Iran. They all would be users of this information. And once we have finished with the analysis, once it's published, it doesn't sit in our drawers. It gets distributed widely through our mechanisms, through our database, through our webpage, and we will actively speak to the investors that use our research also about the research that we've done on Iranian companies. And we will contrast and compare as to what have we seen here in Iran, how does it work in Eastern Europe, how does it work in Central Europe, and we will give investors an opportunity to really make up their minds as to how does this risk compare to that risk, and is there any opportunity for me to get this risk, the differences in risk, compensated adequately? That's very much the role of ratings in the capital markets. And I said earlier that we need to have a differentiating analytic. Otherwise, there's no need to have a European rating agency. Now, when I compare scope and scope methodology to my former colleagues at Standard & Poor's or to those at Moody's or Fitch, by no means, and please don't get me wrong, I'm not saying one is right and the other is wrong. When I'm saying that my former colleagues from S&P and Moody's, they use a more industrialized approach, a more mechanistic approach, a uniform US-centric approach to credit analytics. I'm not saying that's bad, it's just one way of doing it. We, as a European agency, provide an alternative to that. We provide investors with a European view of credit, which is less mechanistic, which is definitely not US-centric, because we come from a very different cultural background. So by using both, if available, investors get the best of both worlds and can make up their minds by taking all the relevant research into account. If both are not available, obviously they have to stick with one or the other. But for the global financial markets, we're providing this additional European perspective on credit risk. And it would go a little bit too far to explain in detail what that is all about. But as I said before, we do respect and consider regional differences, and we definitely don't use a centric approach, whether that's US-centric or European-centric, doesn't matter. We don't use a one-size-fits-all approach to our credit analysis. This is just a quick selection of names that have mandated us, that we're very actively working with. And we're proud to show that these are very reputable names in the European financial markets. One of the first corporates that have been mandating us was the Linde Group, but you see also BASF, you see Sanofi, you see Lufthansa. On the financial institution side, maybe important to mention KfW, Crédit Foncier in France, Commerzbank, obviously. We've been very proud of a mandate by the European Investment Bank for a structured finance transaction. We're very actively working with banks like Santander and Barclays, again on structured finance. And we also have a fund analysis business, and we're working with these large European investors on analyzing and rating their funds. Our coverage, and you have to remember that we are only in existence since 2013, basically as a rating agency, our coverage has grown significantly over the past few months. It's 13.5 trillion euros of rated bonds that are already out there in the market with a scope rating. And then you can see the other numbers as well. So fundamentally, a ratings process takes, on average, 6 to 8 weeks. 6 to 8 weeks, provided that, firstly, you have the information available that we need, and secondly, you're available to speak to us within that period of time, because it's not a desktop exercise. We will need the interaction with the CFO, with the treasurer, and with other managers, directors of your institutions, because we need to understand you and not just look at your figures. So 6 to 8 weeks, we will tell you what sort of documents and information we need. And normally you should have that available anyway. We also need not just backward looking, i.e. your P&L, your balance sheet of the past. We also need your forward-looking statements, your budgets. We need to know what you're up to in the future, because the benefit of a rating is a forward-looking opinion on credit risk. So we will tell you what we need. We will analyze what we get. We will have a discussion with you on where you see the company, where you think it's going to be, what measures you are going to take, and we will take that away and come up with a rating on that. We will discuss the rating with you. We will discuss the rating report with you so that you understand where we are coming from. You can alert us to factual errors. You cannot tell us the rating is too low or it's too high or whatever it may be, because that's our opinion. But you can alert us to factual errors. And then, and this is important, it is your decision whether the rating gets published or not. So for the first time rating, it's always your decision. If you tell us to put it in the drawer and not talk to anyone about it, we will do that. If you tell us, okay, publish it and speak to your investor base about it, we will do that. Okay? So as I said, fundamentally 6 to 8 weeks, provided that all the information is readily available. With some companies in Europe, it goes a lot quicker than that. With some others, it takes a little longer. And to finish part of this presentation, but we do more than just ratings. And I understand that implementation of Basel II is a big topic in Iran right now. And for the implementation of Basel II, those of you who represent financial institutions may be in the need of risk assessment models. How do I analyze corporate risks? How do I analyze project risk internally for my own Basel II compliance? So fundamentally, and this is at the very bottom of the slide, and I hope one can see it from the back, we provide assistance in how to measure and how to manage credit risk across the board, anything that you can think of. We help you to meet regulatory requirements. Basel II, Basel III in the future. You can use scope as an extended credit workbench. So you can also outsource part of your credit work to scope. And we can help you, or we can facilitate making credit decisions for you by providing you with decision-making models. And when I talk about decision-making models, the one example I'm giving here is credit models. We have credit models in place for virtually everything. whether it's corporate risk, whether it's project finance risk, whether it's structured finance risk. We can run these models, and the models will produce a score. And we can calibrate that scoring system to your internal needs, or we can offer you a calibration that matches our views on credit risk. Whichever way you want it, it can be done. Ultimately, if you use it for Basel II purposes, you will have to get it accepted by your central bank. But we can help you in establishing a credit scoring system that you can use for your internal credit risk management. And to finish off here, what we also provide is tailored solution and training. So maybe what's interesting for you as a financial institution or an investor is to train your people on how to analyze credit, whether it's corporate risk, whether it's bank risk, whether it's project finance risk. We can help you establish training courses internally. We can run those training courses for you internally, but we also obviously train your staff in how to apply the credit models that we may have implemented for you. So with that, I'd like to finish on basically 2 comments. Scope Group, Scope Ratings, Scope Risk Solutions, which was the sister company that's providing the training service we're talking about. We're committed to the Iranian market. We've been here, as I said, for about a year. We've had very many discussions. We believe that there is a good fit between a European rating agency and Iranian market participants, and we are committed to providing these services to the Iranian markets. Unfortunately, like everyone else in the world, we have to abide by laws. But if everything stays the same as it is today, we are here to serve you. And secondly, we are also committed, because that's been a question that came up in virtually every discussion I've had, we're also committed to, over time, put people on the ground here in Tehran. Now, that can only happen when there's an economically viable case. So as soon as we have a reasonable book of business, some existing business, existing partners that convince us that commercially Iran is an interesting market for us, we will then make the investment and bring people on the ground here in Tehran, because we want to be close to our clients. This is why you saw the map earlier. We have offices in the various different places in Europe. We want to be close to our clients. We want to speak the same language. We want to speak in front of the same cultural background. But it needs an economic case for that to happen first. If anything, or under any circumstance, we need to maintain our independence, our analytical independence, also our financial independence in the sense of partnerships, because the value a rating agency provides is this independent, forward-looking credit estimate or view on credit development. So independence is very high up on our scale. And with that, I hand it back to, where is he? There he is.
We'll have a break now, Torsten. Thank you so much.